Hey everyone, welcome to the KE Report, a daily editorial chatting with Joel Elconin. Joel is the co host of the PreMarket Prep show. You can check out the PreMarket Prep website, which I will link to in the show notes. He also just launched the Stock Trader Network, live trading service for all of you guys that are the active traders. Definitely check that one out as well. Joel, quick recap of U.S. equity markets. We all know how tough this month has been, and well, we're ending this week really with another big red day. A couple percent down on the Nasdaq, couple percent down on the Russell. S&P is over 1.5% down today. This is the month of March, going to be the worst month for U.S. markets broadly since 2022. We all remember 2022 is the kind of bear market in a sense that lasted almost a year, arguably 9 months, and then came roaring back. But Joel, this is just a 1 month move. A lot of people are getting worried, getting fearful of further market pullbacks. What do you have to say about this market?
How about March Madness, huh? At its peak. Thanks for having me, guys. Still fighting a little bit of a cold, so I'll be a little bit raspy. We're in trouble. I mean, technically, fundamentally, this market's in trouble. So many different ways to analyze the market. Right now, just for the short term technical, you got to look at that March low, and sure feels like we're going to test that. If there can be a successful defense of the March low, another rebound, then fine. What I did not like about the market's price action earlier in the week is just the way, there are big moves after expirations, but there was absolutely no reason for that move that we had on Monday. Post expiration, the market gaps up, and really no fundamental reason. And you caught the pause on Tuesday. Wednesday, the tariffs, the tariff tantrums. Thursday, a pause in the action. And then today, people are heading for the exits. So the technicals are not looking good. The fundamentals are not looking good. And now I think you're getting to the point where consumer sentiment is getting hurt as well.
Well, Joel, when you just pan back and look at it, as Corey mentioned, we had a pullback that was pretty rough in 2022, a corrective move, but that was coming off of 2021 frothiness where the valuations were just at nosebleed levels. One could make the same point that at the end of last year, especially that rally in November and December, things got up to nosebleed valuations again, and we're just looking for any reason to correct. I know everybody's pointed it all at the tariffs, but there's a lot of reasons for a lot of stocks to pull back besides just tariffs. Not all these things have anything to, a retail clothing factory may or may not have any impact on tariffs. So when you look at the picture from the S&P 500 or the Nasdaq, weren't they a little frothy at the end of last year? And don't we need a correction like this once in a while in the markets just to wash out the froth?
Yeah, well, valuations don't matter until they matter. And when you talk about PEs, it's price to earnings, right? So if the earnings are increasing and the price can increase, but it always multiplies faster on the upside. And people don't take into account when the price comes down, is that also that could be an indication that earnings are coming down. Just to use an example of Lululemon today, came out with good numbers for this quarter, but they gave some lower guidance. I mean, there's been a lot of lower guidance. The Fed is forecasting lower GDP, and you're still, facing the possibility. Today you had a little uptick in the inflation, but just the recipe for disaster, lower growth, and I wouldn't say rising inflation, but it's certainly not declining.
But Joel, to your point, right? It's that guidance that everyone cares about. And quite frankly, I don't see any companies out there providing guidance that says everything's going to be fine. We can keep on growing. Maybe some of the mining companies actually do because those metals prices have gone up. But overall, every company, it seems like in the US, really around the world, especially that sells any sort of consumer goods, they're in trouble because they can't plan around these tariffs. So, quite frankly, everyone's guidance is crap right now.
Right. I mean, we haven't even, we've had this been talking for a few minutes here, and we haven't even talked about tariffs and the impact of that. I mean, it's a tariff war, it's a trade war. any way that you look at it, it's cannot be. I don't know how people come across to me and say, "Oh, the tariffs aren't passed on to the consumer." Well, I mean, you already see car prices go. I don't feel like going out and buying a car, even though I really don't need a car because of the prices. So there may be a little pull forward there. But there's one thing that that the market doesn't like, and that is uncertainty. I don't think that we have been in a more uncertain period as far as policy in decades. So what you're seeing in the markets is just a byproduct of no clarity. I mean, was it April 2nd the date? Well, what did he come out and say on Wednesday? And then the EU said this morning, that false rally we had. Oh, the EU is willing to come to the table. There's no clarity in this market. People don't, you don't know what the next tweet is coming. You don't know what country is going to be attacked. You don't know what consumer group is going to be attacked. So uncertain of all the underlying causes here of potential recession, worse earnings. The thing that the market fears the most is uncertainty. That's what you have here in this market.
Yeah, that seems to be the word we've been echoing the most on the show is the word uncertainty. We just don't know what's going to happen, not just here, but also internationally. And some money is fleeing to international markets for that reason. But let's boil it down to the consumer. Do you think that some of the uncertainty in maybe the economy and maybe the job market, because there are a lot of government layoffs too, how is that playing into consumer health and their uncertainty?
I mean, look at your retail stocks. I mean, across the board. I just mentioned what your Lululemon's doing today. I mean, Walmart, even for the middle, the lower price shopper, Walmart's had a 20% haircut. I mean, if it's not evident in the retail stocks, then move over to the housing stocks. Have you looked at the housing stocks lately? Have you seen what they're doing? I mean, the consumer, consumers that no matter what side of the aisle they're on, they're uncertain too. And you know that the job cuts that are going through the government are going to flow through down to the public sector too. So they're not spending. And then airlines, holy mackerel. I mean, United Airlines. I mean, come on, international travel. I mean, I don't even want to go. I don't even want to go out of Oakland County that I live in. I mean, going to Canada or going overseas or going to Mexico. Conversely, who wants to come here? Who wants to go on who wants to go to Disney World from out of the country? And if you go to those Disney World and those places, you see so many people traveling from out of the country. Now you have not only do you have people spending less money, but now you're like, well, yeah, I can go there, but am I going to be able to get back? There's a couple being detained in Mexico right now. I mean, the anti American sentiment that has been set as a precedent over the last few months is undoing hundreds of years of political politics.
It's so true, Joel. Look, I live in Canada, right? And that's all people are talking about is adjusting their travel plans to not go to the US. And quite frankly, everyone's wondering if any live event in Canada, if people are going to boo the US national anthem still. It is the worst I've ever seen it, which also tying into markets, I think we're also seeing people say, I'm not investing in US markets. I'm not investing in US stocks. I'm looking completely elsewhere, which is, I think, maybe one of the biggest generational potentially changes here if a broader audience, investing audience, turns away from the US. And that seems like it's happening quite a bit right now.
Yeah. Yeah. I mean, I don't know. I'm trying to find something positive, and then you bring up more negative. I mean, I don't.
Well, it's hard though. Everyone's negative out there. No one knows what's happening. And quite frankly, again, people are mad at the US, and that's hurting the markets.
Exactly. Exactly. And I don't know what's going to turn it around. I really don't. And I know you can use the technicals as much as you want, but I would just say, to the investor that, buy the dip is something that's worked for a long time, right? But also selling the rip. And if you look at this from a perspective, and I'm not, how far back you want to go, but even if you just go to the COVID low, And I'll go the COVID low in the SPY, right? Your COVID low was what, 220 or something like that? And let's just say it was 220 and it went to 600. Let's just call it, so there's nearly a 400 point move. I mean, for the SPY, which is currently trading at 557, I mean, could it come down to 450? I mean, there's always retracements. So, and look at, some of your stocks that you own. Like if you think you're buying a dip in Apple now, I mean, it ended 2022 at like 130. I mean, so you got to be cautious. You got to be cautious in what you're buying and cautious in what you're selling.
Yeah, Joel, there may be a time like in all markets where buy the dip doesn't work. A lot of investors have been so, I guess, spoiled, you would say, over the last 14, 15 years that buy the dip has always worked. There may be a time where we actually have a more protracted correction in the markets, which are normal and healthy, but I don't know that people have the right game plan if that happens. I guess if you want something positive, we can look at gold, Joel, your favorite asset. It is up at all-time highs, screaming higher on the futures, up to over $3,100. And that seems to be a safe haven play where people don't like that uncertainty word. So they're piling into gold as a refuge. What do you make of the move in the yellow metal?
I mean, I had it forever and I let it go. I was doing some re-asset allocation. I really regret it because I usually never sell anything. It's a safe haven and it's finally doing what it's doing. It's breaking out. The only thing you can say about these things is if you have profit targets along the way, take your profit targets. It just seems like there's always the inevitable rug pull in these things. And, where you come in and gold's down $200-$300 or for the GLD. But I know you have a lot of fans in the Cortland Economic Report that have been riding this train for a long time. So just be respective of the market and your targets and, selling calls or using puts to lock in your gains because there's always going to be, that inevitable rug pull. So I would just say whether you're in the miners, when you're in the GLD or GDX, just keep an eye on that closing price, that all-time high closing price and see how it reacts to it the next day.
Okay, that's a good advice there, Joe. Something to look out for. And hey, look, it is the one market that's seemed to have gone vertical to the upside, including the shares. Broadly, then, Joel, is this a good market to be shorting in the U.S.? Do you move your money internationally to, let's say, even Europe with their increased spending on the military, or even to China, where they seem to be bouncing back? Are there better opportunities internationally, or do you simply short the U.S. markets?
Well, a lot of people don't short the markets, Corey. So besides under your mattress, 5-6% in the bank, some preferred stocks or things where you can get some yield, China's had a big run. So, I think you'd be buying at some elevated levels. I would, look to move overseas, but, what's going on in Germany and what's going on overseas, I just couldn't go in all over there based on the geopolitical situation. I don't know what's going to happen with the Ukrainian war, and I don't know what kind of agreements are going to come to, and I don't know what can happen after that. So, cash is king, and I think that's something you have to respect right now.
Well, Joel, when you look at the fact that Monday is the end of a quarter, and there's a lot of book squaring that goes on with institutions where they want to get out of some asset classes, get into others. And we just had the options rollover, as you mentioned last week. Do you think that's playing into some of the volatility we're seeing where people are kind of doing some book squaring here before Q2 kicks off?
I think it's just the opposite effect is when you have a strong market and a strong quarter, the managers want to show that they're in these stocks. And now what the manager we're going to want to show is that they're not in these stocks and that they're higher cash and they're being more conservative. So I think that the positive effect works when the market's going up, but I think it has an exact opposite response when the market's going down. So I don't think there's going to be any lipstick on a pig window dressing. I think the net sellers of stocks as opposed to net buyers.
All right. Hey, Joe, we'll reconvene with you next week. Who knows what we'll be talking about? Well, I have a pretty good feeling of what we'll be talking about. Probably what happens with the tariffs next week, unfortunately, but those are kind of the biggest I guess, clouds over these markets, and they continue to rain down on these markets because, boy, oh boy, who knows if this is just the beginning of a prolonged pullback in these markets that, in all fairness, had 2 very good years, and now no one knows what's going to happen around the world, and it seems like a lot of people are selling. Again, Joel Elconin, co-host of the PreMarket Prep Show. Click the link in the show notes to learn more about Joel's shows. Joel, thank you for your time. I hope you have a great weekend.
Okay, thank you guys.